Welcome to 3 Minute Tech. These are the videos where we answer your technical financial planning questions without all of that jargon. Shot on location at our beautiful new offices, Level 37 QV1. So today we'll be talking about what are some of the tax consequences when you inherit superannuation. Now you might recall in our last episode we spoke about who inherits your superannuation. And this is a really important topic as well. And today we'll be touching on if you do inherit superannuation or someone inherits your superannuation, what kind of tax will they have to pay? So what determines the tax consequences of inheriting superannuation? Well, there's two primary factors. One, who inherits your superannuation, and two, what are the underlying components of your superannuation? And we'll discuss these in further details next. Well, let's start with the good news. A spouse, a child, or a financial dependent will inherit superannuation entirely tax-free. But who doesn't that include? Namely, it doesn't include adult children. And for an adult child or anyone else, it's important to understand what are the internal components of superannuation, because this will dictate the tax. What are the internal? So you might be scratching your head and saying, what are superannuation components? Well, you're not alone. Superannuation components are generally not well understood. Inside your superannuation, you'll have two components. A tax-free component, which is built from after-tax contributions to superannuation. And you'll also have a taxable component. How's this built? Well, this is built from your employer superannuation contributions, tax-deductible contributions, salary sacrifice contributions, and all the earnings within superannuation prior to retirement. So you might be thinking, which component is bigger? Well, it's clearly the latter. Prior to retirement. It's those taxable components that you build during your working life that generally consist of the majority of people's taxable components that you build during your working life. So what are the tax considerations when inheriting these components? Well, the tax-free component, as the name would suggest, is entirely tax-free. This doesn't matter if you're an adult child or anyone else. It's entirely tax-free. But the taxable component, which like I said, is the vast majority of your superannuation, generally speaking, this is taxed at 15% plus the 2% Medicare levy when inherited by a non-financial dependent, such as an adult child. Medicare levy when inherited. Now I'm sure many of you are thinking, well, this is great, it's important to understand what are the tax considerations, but what can we do about it? And you're right, there are some things we can do for the right type of person. This may consist of a pension strategy, running multiple pensions inside your superannuation when you retire. It may be a recontribution strategy, which we've discussed previously within this episode, or it might even be what's called a deathbed withdrawal. Now, I won't go into too much detail on these today. We'll discuss these in further detail in a future episode of 3 Minute Tech. In today's case study, we have Jack. Jack has a $1 million self-managed super fund. Now beneath this self-managed super fund, the components are 90% taxable and 10% tax-free. So what happens if Jack passes away and Jill, his wife, inherits his superannuation? Well, because she's a spouse and Jill, regardless of those components, she inherits it entirely tax-free, and there's no tax considerations to those components. But what about entirely tax-free when Jill passes away and there's no tax? If she passes away, leaving it to her adult son, what happens in this case? Well, because the adult son is a non-tax dependent, there is tax to be paid. And it depends on that taxable component. How much tax? What you might want to ask? Well, it's $153,000 on that taxable component. So again, it's important to understand this, and it's important to understand what we can do about it, which again we'll be discussing in a future episode of 3 Minute Tech. And it's important to understand. So what have we learnt today? Well, we know a spouse, a minor child or a financial dependent pays no tax on inheriting superannuation. But for everyone else, like an adult child, they will pay tax, and it depends on these underlying components. Everyone else, where can you check your components, you might ask? Go to your member statements, go to your annual statements, and check what inherent tax liability you may have. Statements and check what inherent tax liability